As the owner of a family business, you are part of our economy's largest financial engine. Just think of it. 90% of all businesses in the U.S. are family-owned, and they're the main generator of new jobs, accounting for 78% of all new job creation. Just considering these facts alone, it's easy to see that it's well worth spending the time and effort to make sure these engines continue to run into their second and third generations of operation. However, like many aspects that fall outside of daily operations, you have little time to plan for how the transition to the next generation should happen. Failure to have a plan can be costly to you, your family, and your business. With a startling 97% of family-owned businesses failing to operate in the fourth generation and beyond, there's plenty of ground that can be made up. Think 4 generations is too far to plan ahead? Most family-owned companies struggle to survive beyond a single generation, where only 30% survive into the second generation. A buy-sell agreement can help. A buy-sell agreement, fully funded with life insurance, greatly increases the company's ongoing survival after an owner's death, disability, or retirement. A buy-sell agreement is a legal arrangement that obligates the parties involved to either sell or purchase the business. There are generally 2 types of buy-sell agreements. The first is a cross-purchase agreement, where each owner owns a life insurance policy on each one of the other owners. If one owner passes away, the agreement makes sure that the estate sells the business interest to the surviving owners. Life insurance provides the funds for the surviving owners to make the purchase. Interest acquired in a cross-purchase transaction increases the surviving owner's cost basis, or the original value of their interest, by the amount of the purchase price. This is important because if you later sell the interest in the business, what you owe in capital gains taxes will be based on the difference between the cost basis and the price at which you sell. A step up in basis reduces your capital gains tax exposure. The drawback with cross-purchase arrangement comes when you have more than 2 owners. The number of policies needed to complete the process grows exponentially. The other type of buy-sell is an entity purchase agreement. In this case, the business itself purchases a deceased owner's share from the estate. To fund these future purchases, the business owns life insurance policies on each owner. No matter how many owners are involved, only 1 policy per owner is needed. However, if an entity purchase agreement is used, there is generally no increase in basis for a surviving owner's interest. There lies the problem. How can you have the benefits of both, securing a step up in basis, but not have to deal with the complication of multiple policies for owners? Consider a buy-sell LLC. A buy-sell LLC is an arrangement that takes advantage of the best attributes of the cross-purchase and entity arrangements. Under this approach, the business owners would still execute a cross-purchase agreement, but they would form a limited liability company, or an LLC, to own a life insurance policy on each owner. So like the entity purchase, you will only need 1 policy per owner. Upon an owner's death, the LLC receives the policy proceeds and allocates the proceeds to each surviving LLC member, who then purchases the deceased owner's business interest in both the LLC and the underlying business. Like the cross-purchase agreement, surviving owners in a buy-sell LLC will receive a step-up in cost basis. Moreover, the buy-sell LLC provides an additional benefit for when an owner wants to sell their share of the business to the remaining owners. For instance, when they retire. The policy on their life may be transferred to the exiting owner tax-free as part of the purchase price. The exiting owner can subsequently access their policy cash value, which can be used for things like paying for retirement needs, a child's education, or emergencies. The buy-sell LLC provides the advantages of standard buy-sell planning while effectively eliminating the disadvantages. Whether your company faces an owner's death, disability, or retirement, the buy-sell LLC provides flexibility and succession planning. Contact your Emeritus representative to help you decide if the buy-sell LLC is right for your situation. We are Emeritus, proud to be in the business of fulfilling life.